Hello, everyone, and welcome back to Gold Off the Charts. Cut through the noise. Get the daily financial edge you need to see exactly how wealth is built. Just yesterday, the gold market staged a thrilling high-altitude dive. Throughout the Asian and European trading sessions, gold prices plummeted, slicing right through the key support level of 4,450 and even hitting a low of $4,407, just a breath away from the 4,400 psychological mark. The market was in a panic, and many short-term traders likely got scared into cashing out their chips at the bottom. But if you've watched my previous videos, you know I've been emphasizing one specific point. Do not be intimidated by the annual rebalancing of the Bloomberg Commodity Index at MN. I warned you that the selling caused by these weight adjustments is essentially a fake-out and creates a rare golden buying opportunity. Sure enough, once the U.S. session opened, the plot flipped. The selling pressure was absorbed, and gold prices snapped back aggressively, closing steadily around $4,480. So, why did gold experience this technical fake-out? And how did it regain its lost ground so quickly? In today's video, we are going to perform a deep dive review and forecast. Why do this? Because over the last 48 hours, a series of seemingly separate but deeply connected events have hit the global markets, from shifts at the U.S. Treasury and Trump's staggering $1.5 trillion military plan to the strategic moves of crypto giant Tether, and a final warning from investment legend Ray Dalio. Hidden behind these headlines is a massive signal. The global order is shifting, and we are on the eve of the largest wealth transfer in human history. I noticed many traders were washed out during yesterday's fake-out or are feeling anxious ahead of the non-farm payroll data. If you're still on the fence about owning gold, or if you're thinking about quitting because of a little volatility, please watch this entire episode. I believe you'll find the answer here, and it might be your most important investment decision of the year. All right, let's get straight to the point. First, we need to rewind to yesterday and look at the price action that had everyone's heart racing. If you were watching the charts, you'll remember that dive during the Asia-Europe sessions. Gold slid from its highs, breaking the $4,450 support and bottoming out at $4,407. It looked like it was about to crash through the 4,400 level. At that moment, I bet many people's mental stop losses hit, and they thought, it's over. The top is in, it's going to collapse. However, friends, if you followed my previous analysis, you would have stayed calm. I've highlighted this before. Do not turn blindly bearish just because of the Bloomberg Commodity Index rebalancing. What is this event? It is a purely mechanical passive fund move. Because gold went up so much last year, its weight in the index exceeded the limit. Therefore, billions of dollars in passive funds were forced to sell gold this week just to bring that weight back down. This is a technical adjustment, a temporary hit to liquidity, and has nothing to do with gold's actual value. I told you then, don't bet against gold because of a math correction. On the contrary, for smart money, this is a gift. The big players are just circling back to pick up more buyers, creating a once-in-a-lifetime buy-the-dip moment. The logic held up. Once the U.S. session opened with better liquidity and that mechanical selling was finished, smart money rushed in to buy the bottom, and gold rebounded instantly. So, why was the bounce back so fierce? Was it just because the selling stopped? Definitely not. The real reason is that several bombshell news stories broke during the U.S. session last night. These headlines rattled the market and reminded everyone that gold remains the ultimate safe haven in a messy world. The first piece of news concerns U.S. monetary policy, and the signal is incredibly strong, almost like a demand for action. As we know, the market has been torn over when and by how much the Fed will cut interest rates. But yesterday, a report broke that ignited the bulls and gave traders total confidence. U.S. Treasury Secretary Scott Bessent publicly stated that the Fed should not delay rate cuts. That is a heavy statement. In the U.S., the Treasury and the Fed are technically independent, so the Secretary usually speaks for the White House. But even more important than that is the rise of a super dovish leader inside the Fed, Governor Stephen Milon. In his latest speech, Milon explicitly called for rate cuts of about 150 basis points in 2026. Everyone, memorize that number, 150 basis points. What does that actually mean? If the current rate is around 3.5%, a 150-point drop brings it down to 2%. That is a massive amount of easing or printing. Milan described current rates as significantly higher than neutral and too restrictive. Think about it. What does it mean when a sitting Fed governor openly calls for aggressive cuts and keeps doubling down on that message? It shows the hawk versus dove war inside the Fed is reaching a boiling point. The doves are basically launching an uprising. Once the market prices in this 150-point expectation, can the US dollar index stay strong? No. The dollar weakening is a certainty. And since gold is priced in dollars, when the dollar drops, gold naturally goes up. Plus, lower rates mean the opportunity cost of holding gold disappears, causing money to flood into assets that don't pay interest. This is the first reason gold recovered so fast yesterday. The macro-monetary tide is turning, and a massive liquidity feast is being prepared. Now, let's look at the second piece of news, which is even more wild. Our main character is, once again, President Trump, who always plays by his own rules. According to recent reports, Trump just dropped a geopolitical shock bomb. He claimed the U.S. must own all of Greenland rather than just having military rights through existing treaties. Notice his specific word, own. Trump argued that ownership has a strategic value you can't get through a lease. Now, many people might think this is a fantasy or just Trump joking for attention. After all, who buys a country in the 21st century? But in my view, this is all about business, profit, and risk. Why Greenland? It's a strategic gateway to the Arctic Circle and its shipping lanes. As the ice melts, the commercial and military value of the Arctic is exploding. Whoever controls Greenland controls the logistics of the Northern Hemisphere. Even more important are the resources. What's buried in Greenland? Massive amounts of untapped rare earth minerals. This Buy the Island plan is really about ending dependence on foreign minerals and achieving resource independence. But this forced purchase or ownership talk is guaranteed to trigger a backlash from Denmark, the EU, and Russia. This threatens the existing global balance. It worries allies and makes enemies feel cornered. Furthermore, matching this Greenland ambition is another chilling statistic. Trump wants the U.S. military budget for 2027 raised to $1.5 trillion. Let that sink in. $1.5 trillion. That is a 50% increase over this year's budget. It is an astronomical figure. How is the U.S. media reacting? Some believe military spending on this scale suggests the U.S. is preparing for a world war. Media. Yes, you heard that right. The media is actually using that term. Analysts believe that even if the full amount isn't approved, the direction is clear. The U.S. is ramping up. It shows the traits of a nation preparing for a massive global conflict. Trump's remarks are adding fuel to the fire for gold's safe haven demand. This isn't just short-term hype. It's a deep reshaping of global security for years to come. As long as these wartime expectations exist, the risk premium on gold will never go away. This is the second driver of yesterday's bounce extreme geopolitical risk. Next, I want to talk about the third piece of news. Traditional gold traders might miss this, but it's huge for the future of gold as real money. This is the latest move by the stablecoin giant Tether. You know Tether, right? They issue USDT. Well, they just announced a new concept called Scudo. This isn't a new coin. It's a new unit of measurement for their gold-backed coin, XAUT. 1 Scudo equals 1/1000th of an ounce of gold. At current prices, a Scudo is worth about $4.48. Why does this matter? Tether CEO Paolo Arduino said it clearly. This is to lower the barrier to entry. Previously, buying an ounce of gold cost over $4,000. For retail investors or people in developing countries, that's way too expensive. But with Scudo, for the price of a cup of coffee, about $4.50, you can own a piece of real physical gold. The importance of this is being overlooked. This isn't just a unit change. This is the democratization and monetization of gold. It reflects a growing trend. As faith in the dollar fades, the market is finding alternatives. Gold is bypassing banks and the dollar system using blockchain technology. It is becoming the king of finance for the global working class once again. This massive bottom-up demand will provide long-term support for gold prices. So, this third logic gives gold its most solid value, the return of its monetary status. At this point, we have to look at a legend on Wall Street. Ray Dalio, the founder of Bridgewater. His recent views are worth studying because he exposes the illusion of the U.S. stock market rally. He points out that while the Dow and S&P 500 are hitting record highs and everyone is cheering, it's mostly a monetary illusion. What does that mean? It means stocks aren't rising because the economy is great or companies are making more money. They're rising because the denominator, the US dollar, is losing value. If you measure the stock market in gold instead of dollars, you'll see stocks haven't actually gone up much. They've even fallen. Gold has far outperformed the stock market. Dalio warned that while the stock market bubble is still in its early stages, the structure is very fragile. It's built on endless printing and massive debt. Once the market realizes the dollar is losing its store of value status, this sandcastle could collapse. In contrast, the logic for gold is getting stronger. Central bank buying, de-dollarization, geopolitical hedging, and the retail demand from Scudo. These are hard facts and real-world needs, not just financial games. Now that we've sorted the macro logic, let's focus on the here and now. Tonight, Friday, brings the biggest data release of the week, non-farm payrolls. This report is special. First, it's the first NFP of 2026, setting the tone for the entire year's economic expectations. Second, it's the first clean dataset since the October government shutdown, finally showing the true state of the economy. The market will be looking at this through a microscope. However, I want to remind you, regardless of the numbers, yesterday's fake-out showed us how strong the buy-side demand is. With such solid fundamental support, Fed officials calling for 150-point cuts, Trump's $1.5 trillion military buildup, and Tether making gold a payment method, short-term data like the BCOM rebalancing or the NFP report are just small waves in a very long river. They might cause a temporary dip and scare away weak hands, but they cannot change the direction of the tide. Even though gold is at all-time highs, it remains a market that is easy to pump and hard to dump. For regular investors, the strategy is simple. Don't try to guess the top, and don't panic. Treat every news-driven pullback as a gift, an opportunity to add to your position or get a better entry. Tonight's NFP will be volatile. But if you understand the trend and hold your chips, no matter how big the storm gets, you will find your treasure island in this ocean of wealth. That's it for today's deep dive. Finally, a reminder. This analysis is based on my personal observations of market news and logical deduction. My goal is to help you cut through the noise and see the truth, the alpha. This is not direct financial advice. If you found these insights helpful, or if they helped calm your trading anxiety, please leave a comment and share your thoughts. Don't forget to like and subscribe to Gold Off the Carts, and share this with your friends. I'll see you in the next video.